Hello and welcome to Iperion X from the Helm series. I'm Grady Wulff, Market Analyst with Iperion. Iperion X is commercialising novel titanium production technologies which have the potential to disrupt the current global titanium supply chain. Today I'm thrilled to be joined by Taso Arima, the CEO of Iperion X, to discuss the company's new facility in Virginia, contract wins with the US Department of Defense, and the properties of titanium that make it a superior metal. Taso, thank you for joining me today.
Great. Nice to be on, Grady. Thanks very much for having me.
Now, for our investors who may not be familiar with Iperion X, can you please give us a rundown of the company?
Me and my team, we founded Iperion X in 2020 off the back of a supply chain issue we had seen coming, where the last titanium metal sponge plant, akin to a crude steel plant, had announced that it would shut and subsequently shut in 2020. And so we went ahead and we built Iperion X for the sole purpose of reshoring that titanium supply chain in the United States, which is currently controlled by China and Russia. And so we did that. We're doing it mainly with new process technologies, which allow us to take either titanium minerals or titanium metal scrap and create high purity, low cost, high performance titanium metal products. And eventually we aim to bring down the cost of titanium metal such that we not only are able to disrupt the titanium metal supply chain, but also the stainless steel supply chain. So quite an integrated company. We also have a titanium mineral asset in Tennessee, which is fully permitted as of last year. So we are an end-to-end supply chain solution for the titanium metal supply chain for the United States.
Now, your new facility in Virginia is ramping up production this year. What opportunities will this facility provide in terms of firming up commercial arrangements and potentially adding new customers?
We've been operating since 2020. We listed in late 2020 and then secured the technologies that we are using for our process, our proprietary technologies, in 2021. We've been operating a industrialized pilot facility in Salt Lake City, Utah, where the technology was born out of the University of Utah from Department of Energy funding initially. But then over the last few years, we've industrialized that pilot. We've produced titanium metal products. Some products are actually sold in the market today in the luxury goods industry. But there's been a lot of effort put into the Department of Defense supply chain, because that's where titanium metals use is very large here in the United States, in addition to aerospace, commercial aerospace. Titanium's superior benefits of lightweight, superior strength. It's 3 to 5 times as strong as stainless steel, for instance, by 50% of the weight, and more corrosion resistant than stainless steel. Those benefits allow, or what attracts its use to the US Navy, US Army, but especially US Air Force. And so we, over the last few years, were able to secure customers both within industry, like Ford Motor Company and Richemont within the luxury goods industry, through to Lockheed Martin and GKN Aerospace and Carver Pump within the Department of Defense. Now, that culminated in us receiving a Department of Defense grant in late 2023, $12.7 million, which went towards the build out of the Virginia facility that we're just commissioning as we speak, where we've run the major piece of the equipment, the hammer furnace, which undertakes our core proprietary technologies. But with the scale up happening in Virginia and full production starting to ramp up end of this year into 2025, it would allow us to continue to build on the contracts or the collaborations we've secured already, secure larger contracts, and then from there, in a modular fashion, be able to very, very quickly scale our production to reshore the entire titanium supply chain.
What problems are Iperion X's technologies ultimately solving?
There's a couple of big issues with the titanium metal supply chain. It has moved offshore within the United States. A large chunk of the upstream and midstream refining part of titanium metal, I would say, has moved offshore in a big way. And luckily, there's still Japan there with a few titanium metal sponge plants that supply into the US, where the US brings it in, melts it, and manufactures product. Unlike the battery or the magnet industry, for instance, there is a lot of downstream manufacturing of titanium metal products. I think 30+% of downstream manufactured titanium metal products globally are still manufactured in the United States, and there's probably, an equivalent amount, a little bit less in Europe. So it's not like magnets where most of the magnets are actually manufactured in China. You actually do have a big downstream here, which is not going anywhere. You have a lot of machining, production of components, things like that, but that upstream is gone, and that part of that midstream. So that moved offshore because the historic process is very carbon intensive, energy intensive, and very environmentally unsustainable. So there needed to be a new way, a new process technology, which was developed based on a scientific breakthrough in 2016 by Professor Zhang Feng at the University of Utah. Our technologies, our proprietary technologies that were developed by Dr. Zhang Feng allow us to reshore it sustainably, zero carbon, zero of any of the nasty emissions, environmentally very sustainable. But even just as important, or more importantly in some cases, for some groups, is that we can do this far cheaper. We completely upend the titanium metal supply chain by eliminating the high energy, costly processes to make titanium metal. But then in addition to that, we eliminate a big chunk of the high waste that you see in the titanium metal supply chain today. In an average titanium metal product, like a bolt, you would typically see from mineral to sponge to ingot, that ingot formed into a titanium metal bar, that bar then machined into a bolt. You may only have 5% of the contained titanium metal from the mineral in that final bolt. That low yield is really what drives the high cost of titanium metal products, and thus, why some of that process has been offshored, but really why titanium metal is not seen in a lot of other applications today. Whereas our process eliminates that. We can make powder, we can go to direct into shapes like the shape of a bolt, and then that bolt is finally machined into a final bolt. And from soup to nuts, from scrap or mineral to that final product, you're going to see yields of more like 80%, 90% in some cases. So it's an order of magnitude improvement in the titanium metal supply chain, the cost of the titanium metal product in the end, whilst giving those environmental benefits as well.
Your initial focus has mostly been the US market for titanium products. How have you seen this evolve over time, and how do you see this evolving? And do you think eventually Europe may be a part of the larger picture for your growth strategy?
The downstream market and the market for actual titanium metal products is still very much the United States. And then if you look out to other products, when you look at advanced defense products, when you look at robotics, when you look at green hydrogen, when you look at consumer electronics, the United States is still leading the way in a lot of that. Europe will have those and does have those industries, but the US is in this huge growth phase with reshoring, with the funding and the development of energy transition for one, but just this huge growth in robotics, AI, which is driving the want and need for a better, stronger metal for a lot of these products that are out there. And so I think the US is today a big market, but as we drop the cost of titanium metal, I think some of those larger products are going to be in and continue to be in the United States. Yes, we will branch out into Europe because that has a large aerospace and defense division as well. But with manufacturing actually happening here in the United States, I live in the United States, you can see the factories being built. What's coming in the next decade is just going to be huge tailwinds for us, not just from defense, but just from these advanced industries as they're developing rapidly.
You've attracted US Department of Defense grants to the tune of $12.7 million with the potential for additional committed funds. I understand this process involved extensive due diligence by the Department of Defense into IPX's technologies. Could you talk to us about key sensitivities and motivations of the Department of Defense during this process?
Yeah, there's a map that we use, and I'm sure you can bring it up, but really the upstream, so taking titanium minerals and making titanium metal sponge, we just don't do it in the United States anymore. Some of that midstream is also lost as well. The United States was actually, prior to the Ukraine war, bringing in about 7,000 plus tons of titanium metal products from Russia. It continues to bring in some metal products from Russia, but significantly down from that. Continues to bring in titanium metal products from China, but significantly down from that. Titanium metal sponge is right now 90+% sourced from Japan. A big chunk of the remaining source comes from Kazakhstan, and so that's a huge issue. The F-35 uses 20+% titanium metal. Aircraft carriers need titanium metal. Submarines need titanium metal. If there was ever a major conflict, say in Taiwan, in the South China Sea, the titanium minerals going to Japan and then the titanium sponge coming out of Japan will probably be cut off. Most likely Kazakhstan would be cut off as well, given that we wouldn't be able to get it to the coast. So you would have this precarious situation where the United States, the Department of Defense, will not be able to manufacture its critical defense products, whether it be F-35 jets, whether it be missiles, whether it be parts on a tank, whether it be parts on a US Navy ship. All these products which are going to be crucial to any conflict in the South China Sea, whether the US is directly involved or is indirectly involved in supplying products or supplying defense products. So the US Department of Defense saw that when the titanium sponge plant shut. Yes, they've done a lot of work with us. We have wide-ranging engagement across the Department of Defense. This is built over many years of educating them about our process and continues to be so. We have the Department of Defense coming to site in Virginia next month. The $12.7 million, and we also received $500,000 from Air Force Research Labs earlier on in 2023. That's just the tip of the iceberg. We see multiple programs that are funded right now, so they don't need additional congressional appropriations, funded programs where we can access additional funding, and we feel very confident about that additional funding coming. I like to say that the Department of Defense is very similar to an investor, where they see a winning company, they like to continue to back it. They like winners. We are winners. They deployed capital into us November last year, and we already produced our first titanium metal product from Virginia today. A lot of other companies, unfortunately, are stuck in multi-year capital phase build-outs that may sometimes never get there with a lot of the Department of Defense funding. So we are winners. We know and we feel and that they like us, that they are supporting us. We've got wide-ranging support across different parts of the DoD. So I feel very confident that in this geopolitical environment, that we will continue to get a lot of support from the Department of Defense.
Finally, obviously the company's next step is to bed down the new facility in Virginia, but IPX does have expansion plans for this site. When should we expect to hear further about the next stage of growth?
As we go through and start up these initial operations, we made a lot of assumptions from our pilot facilities in Salt Lake City, Utah, and applied those conservative assumptions conservatively to what we thought we could do here in South Boston, Virginia. Even just with the initial furnace startup, we've seen massive opportunities for improvement on those assumptions, for optimization, which will lead to potentially much lower OPEX than what we thought, but even better, much lower capital intensity, because we're already going to be low operating costs compared to all other products out there, but with far lower capital intensity. We're also seeing our product, in some cases, being far higher than what we assumed. We assumed $130 a kilo for our product in past studies that we released to market. We are seeing higher potential prices. We just signed a contract to recycle some consumer electronics scrap, which was in the $300 a kilo range into final products. So we're seeing huge opportunities to the upside as to what we initially thought, even just 3-4 months ago. That first furnace run, I was there when we ran it. There was things first time, this is a high-tech furnace. We were able to see inside what's actually happening a lot better than what historically we could do from, much more low-tech furnace we were using in Salt Lake City. And so we observed some things happening that, yet we were always conservative, but this was far beyond what we were thinking would be, how it would go. So we see massive optimization opportunities for optimization. So we want to get the rest of the facility fully up and running. There's some ancillary pieces of equipment that we need to install over the next few months. By fourth quarter, we'll be starting to get up and running, starting to go into that optimization phase. And then once we've done that, we'll be really able to narrow down, and at the same time securing additional or moving some of the collaborations into contracts, securing additional contracts. And then we'll be able to really make a good decision as to how quick and how fast we expand. The only caveat to that, we have the ability in our current building to expand to 2,000 tons per annum, but the market's a lot larger than that. I would like to get to plus 10,000 tons per annum by 2030. But the only caveat to that is we feel very confident about Department of Defense funding. They want us to, we hear that they want the titanium supply chain to move very fast. And so, if additional funding came through, we will probably move very fast to expand in Virginia. That funding could potentially come through this year, albeit it is an election year and things go on in an election year that you think shouldn't go on. But yes, if DoD funding came through, we would expand very, very quickly. But still, whatever we do, we're gonna do the right thing by the company, by our shareholders, by our customers, by our people, especially. And so, the next few months will really tell. I think there's a lot of catalysts ahead for the next few months around operations, around DoD funding, around customers. That is really going to drive how fast we grow into 2025 and 2026.
Thank you for joining us today, Taso.
Perfect. Thanks very much.
I hope you enjoyed this episode of From the Helm. If you did, why not subscribe to our YouTube channel and sign up to become a Belter client to ensure you stay ahead of all insights and market commentary.